The World Bank has just released, prior to the annual meetings, a report, the economic impact of the 2014 Ebola epidemic, which tries to assess, and I want to emphasize tries to assess, the economic impact of the Ebola crisis in the three countries, but also the potential impact on the neighboring countries and the world economy. These estimates are subject to considerable uncertainty, one, for the traditional lack of reliable statistics, but also, most importantly, for the unpredictability of the epidemiological evolution of the disease. I will just give you a snapshot of what we see looking forward and then get into details for the different countries to then come back to the regional picture. If the virus continues to surge in the worst affected countries and spreads to neighboring countries, the two-year regional financial impact could reach $32.6 billion by the end of 2015. Economic costs can be limited should national and international responses succeed in containing the epidemic and mitigating fear resulting from people's concern about contagion, which is fueling economic impact. The short-term impact for 2014 on output using a series of econometric methodology is about 2.1% of GDP in Guinea, 3.4% in Liberia, and 3.3% in Sierra Leone. We are talking about, though, countries that were growing, have been growing quite steadily. And in the case of Sierra Leone, for example, before the epidemic erupted, we were talking about 11.3% GDP growth per year. So we're going down from 11.3 to 8%. In the case of Guinea, from 4.5 to 2.4. And in the case of Liberia, for 5.9 to 2.5. So quite robust, but still a major setback for countries that have been growing after periods of civil wars. So in the case of Liberia, the large economic impact of the Ebola crisis are not the direct costs, meaning health costs, but those resulting from changing behaviors driven by fear, and that have resulted in generally lower levels of employment, income, and demand for goods and services. This is particularly clear and evident in the case of the country's agriculture sector, where production is stalling as farmers have left their plots in the countryside to move to the cities. At least that's our understanding of the situation on the ground. In addition, investments in the growing palm oil production have been put on hold, and focus has shifted to maintenance. In the manufacturing sector, which accounts for only 4% of the country's GDP, the biggest impact is in the production of cement and beverages. The service sector, which represents half of the Liberian economy and employs nearly 45% of the labor force, has been hard hit by the Ebola, as retail trade and international travels have come to a standstill. Lower agricultural production and panic buying had pushed prices up and increased the demand for imports, which, coupled with a drop in foreign direct investment, are likely to lead to a worsening of the current account deficit. The fiscal impact of Ebola is already considerable due to direct expenditure allocations to tackle the epidemic and foregone revenues. The fiscal gap now to be financed is of $93 million, but it could further increase. In Sierra Leone, economic and social progress has been considerable in the past 12 years, but yet 53% of the population lives around the poverty line or below the poverty line, and more could be pushed below the poverty line if the epidemic is not contained. We're talking about 66% already in the rural areas. Most of the economic impact of Ebola is due to aversion behaviors, especially affecting the tourism sector. Interestingly, the sharp slowdown now evident in many indicators is not as severe as one could expect due to the broad-based and robust growth achieved over the first 6 months of the year. but a sharper decline may be expected in 2015. The agriculture sector in Sierra Leone represents 50% of the economy. The rice production, the main staple of the country, is at risk, as planting, which usually occurs in July and August, has not happened. Famine is a serious risk. The reason why WFP, the World Food Program, and FAO have launched an emergency food operation to provide food to more than 1 million households at risk of chronic malnutrition. The mining sector accounts for 16% of GDP. So far, impact on production has been limited, but production has indeed slowed down, and it could further slow down as in addition to low prices for the iron ore, expatriate workers are evacuated. The manufacturing sector is only 4% of the GDP, but employs a considerable amount of people. As in Liberia, the major impact is felt in the construction and beverages sector. The most dramatic drops are registered in the service sector. Sierra Leone has slowly started becoming a tourist destination, but commercial flights and hotel occupancy have dropped, thus leading to inevitable layoffs of workers. Increased imports of food and health goods, reduced exports, and less tourism are going to lead to a worsening of the external account. Increased recurrent expenditure and a drop in revenues are going to put pressure on the fiscal balance, which is likely to be funded both with overseas development assistance and a reallocation from capital to current spending. Basically, no more investing, thinking about surviving. Guinea is among the poorest countries in West Africa. The country was slowly returning to steady growth after years of conflict. The main impacts of Ebola have been on agriculture and services, mainly transport and trade. Mining remains relatively shielded because the mines are not located in the affected areas. Manufacturing represents only 7% of GDP. And similarly to other affected countries, the external account is deteriorating because of increased imports. But in the case of Guinea, there is also a considerable capital flight as investors repatriate investments and wealthy Ghanaian nationals move capitals abroad. Fiscal deficit is again high due to increased current spending and decreased revenues. Impact on neighboring country has so far been marginal, thanks to strong containment efforts, as we have heard all along today, especially in Nigeria and Senegal also. But that has come to the expense of the most affected countries, which have seen their borders with their regional neighbors shut, and as a result, trade coming to a halt. It is difficult to predict the impacts in the medium to long term, given the unpredictability of the evolution of the contagion. The World Bank has worked at two scenarios: high impact in curbing the epidemic and slow contagion to neighboring countries, what we define low Ebola, and a second scenario, slow impact in curbing the epidemic and high contagion to neighboring countries, what we call high Ebola. The medium-term impact in 2015 on output in Guinea is estimated to be negligible under low Ebola and 2.3% of GDP under high Ebola. In Liberia, 4.2% under low Ebola and 11.7% of GDP under high Ebola. In Sierra Leone, 1.2% under low Ebola and 8.9% under high Ebola. This translates into collective loss of GDP of $97 million under low Ebola and $809 million under high Ebola. In addition to that, poverty, malnutrition, and stunting are expected to increase considerably in different gradations according to the countries we take into consideration. Liberia is the country that is expected to take the highest hit from a continued spread of the virus. Over the medium term, both epidemiological and economic contagion to the broader sub-region of West Africa is likely. Under low Ebola, the loss of GDP could reach 1.6 billion. Under high Ebola, 25.2 billion. Fear, adverse behaviors are the main drivers of the deepening of the economic and fiscal crisis of affected countries of West Africa as a whole. This is mainly going to translate into decreased agriculture production, decreased investments, tourism, intra-regional and global trade. and we should not get there. The economic and fiscal impact of Ebola could be contained if international and national efforts succeed to curb the spreading of the virus, and most importantly, to address adverse behaviors. Focus should be in strengthening health system capacity to detect and address emerging crises, especially at the very local level where it's impossible, where it's very difficult, if not impossible, to detect those. At the same time, the fiscal gaps faced by the affected countries should be filled. The World Bank has already approved $400 million worth of financial support to the 3 countries, most recently in September. We have been working with several UN agencies to deliver health supplies, food and equipment. We've also been providing much-needed fiscal support. But looking forward, it is clear that current response mechanisms are not enough. We need to strengthen health systems to be able to detect and tackle emerging health crises. But we also need to be able to respond swiftly to the crisis. To this end, the institution I represent has launched a call for a contingent mechanism that will allow for rapid disbursements in case of new crisis. Thank you.